Hello, happy weekend traders and investors. This is Market Painter PH, admin of the Market Forecast and Investment. So this weekend we will have a very special topics to share and to discuss with you. And if you have been following my channel, thank you very much. And for new viewers, please like, share, and subscribe. If you're new here, thank you for visiting my channel, and if you've been following me, sit back and relax and enjoy our video content. So here we go. On this weekend we will be tackling about the top 5 highest dividend yielding stocks, and it's of the overall market forecast for our index, Philippine Stock Exchange Index. And first we will be tackling about how also to incorporate the technical analysis and combine it with some fundamentals on each assets. The third one is the essentials of knowing the basic Elliott wave principle and the time theory application. And the last one and the most interesting part is the eighth wonder, and it's some interesting ideas of compounding. So let's dive into it. So to start with, let's begin by analyzing our index. Our invalidation level before, which was at the level of 6330, has been violated, and thus perhaps the market prefers to revisit the support level at around 6,200 breakdown last Friday. Then so possibly it could lead to further room of decline to around 6,100 and then 6,000. So we are anticipating that until September second week, there will also be a continuous sell down for the market, as the anticipated also Fed interest decision, which will be due on September 19 to 20. So on this perspective, I incorporated the interest rate decision of the Fed, because the higher the rates that is decided by the Fed, it will also hurt the equity markets. And to continue, so this will be my forecast for our index. It could be facing another room of decline for the next few weeks, and as everybody knows, this is also, we are also in the period where the market is inactive, and thus investments are pulled out on this period, and we'll be waiting for a good positive buying season on this next month for the bear season. So to continue, we start with the highest dividend yielding we have as being shown, and this is start with the SEC. So what I like with ECC is that it has been consecutively the highest so far, the dividend yielding stock listed in our index. And to incorporate the technical at the same time its fundamentals, so I actually use the dividends X dates that are being applied to the charts. So how to toggle about our dividends is just to right click your chart in a trading view, then you have go to settings, and then events, then you may check on this dividends on the chart. If you like to include also other fundamentals of the stock asset, just also toggle earnings, so that you will be able to forecast or project the possible catalysts for the stock to mark up or to decline. So this basic fundamentals I did incorporate on my technical analysis for me to be aware and be ready for the possible market adjustments and price reactions on this high impact events for the company. So that's it. So that's how I incorporate the fundamentals. And as we all know, companies for formalities have its announcements and disclosures, if they are going to give or issue some specifically the dividends. So but knowing the technical side of this, we are at a advanced side of the group or the public. Why? Such as this, Semirara has priced up since our forecast for the past several weeks. I've shared this chart. We forecasted that price at the 29.2, once there is a breakout on this price, that will be our first confirmation for the bullish idea. At the same time, we have this the monitoring of the breakout of this resistance trend line in our daily time frame. So price broke out, retested breakout zone, and then price shoot up. So that's roughly appreciation of 10%, 8 to 10%. So that's pretty good equity growth if you have to consider. So but we have to consider also which part do we have to accept if our analysis is invalidation. So I have also presented here the invalidation level. So as long as the price do not violate our technical analysis, so our idea remains the same. So eventually the price which we have the catalyst we have, so that's I also included in our sharing that we also have to incorporate some of our basic fundamentals, including the dividends and the earnings. So the earnings revenue we have and the earnings report last August 7. So I have some of my videos I have shared that this could be the catalyst for the markup of the price. So I'm not very sure about the companies if they have disclosed their next upcoming dividend, but as I have seen here and I have written here, I have also taken noted, this is already a special projection and estimation, because this cannot be true because only the company knows on which prices or which dividends they will issue. But this cannot be a financial advice, or this is only for my own perspective. The next dividend that will be issued roughly will be estimated at 4.6 if the company still do the same on the last year they have. So the last year they have issued 3.5 on October, but previously on that they have issued only at the 1.5%, 1.5 pesos per share, and at surprise they issued 3.5 pesos per share later the year, or the last dividend they issued. By that news, by that disclosure, you see the market overreacted and appreciated by 56% from the price appreciation alone. So excluding the dividends that they have issued, so it's really very helpful for your portfolio. So the same idea, if we have to project the same, so the market could also appreciate if while the news is not yet out. So this is the beauty of incorporating technical analysis in your fundamentals. So if we anticipate the company will issue a dividend if and only when they issue the same, right? 3.5 pesos per share. So that would also be enough room for growth for this stock to appreciate more, even more, to attract investors to accumulate on this lower price, given that we also have some daily gaps to be filled at around 40 pesos per share, and the first gap was actually already filled from this daily. When we say gaps, these are all there is an imbalance on the chart. So enough for SEC. That's a top. What else we could really be? This is an interesting dividend stock. This is a win-win for investors like you. Next one is the DMC. Since, as we all know, they are all positively correlated with SEC. Once SEC declares dividend, same is true with DMC. Also, they are almost like a week gap from their dividend issuance, maybe because of its fundamental side that this specific stock have a big percentage of ownership on the other of the former stock I have shared. So DMC, we have confirmation level at around 9.9 or 10 psychological level. So once this price is broken above it, so it could signal our first bullish idea. And then this one, the other one is this resistance trend line. So once broken out, that tested. So it's same is true. It lags a little bit with SEC, but it's slowly following the price is showing us right now. So technical analysis or the price itself leads before even the news came out. So MACD also showing us a slightly growing MACD, so it's a very good bullish signal. So that's it. There's a gap to be filled on the daily at around 11. So if you are a short-term investor, this is already quite good appreciation to consider and partial target for our. So anyhow, dividends, earnings, these are all the basic fundamentals I have incorporated in my technical analysis using the same system, the Elliott wave system. So if you see this WXY 1, 2, 3, these are all the ideas for this system, Elliott wave theory. So let's go back to the second topic we have, and let's discuss it more. How do we utilize these informations, these fundamentals, basic fundamentals, and then these technicals? This is the third stock, LTG. So going back to our topic, how to utilize these informations. So LTG have declared and dividends, that is September 1 at a rate of 0.3 pesos per share. So already ripe, and it's already clear to all the investors that in LTG is to issue this kind of rate. So if you are not holding this asset yet, so it's better to first stay out of it, since the price is expected to decline on this period of time on September 1. Why? It's just the nature of it. The price after the X date is released is due tends to decline by as much as how much the cash dividends is given. Why? If we do the math, the company has fixed amount of shares, and the company has stock price at that certain level. For example, the X date is tomorrow, so today they have, for example, 1 million shares, and it's traded at around 9.9 pesos per share. So tomorrow they will be X date of 0.3 pesos per share. So the new price will be adjusted 30 cents at a decline. So that's roughly 8.7 pesos per share. Why? Because this is to give room for the constant market capitalization. Market cap is it should be the same before and after the cash dividends is offered. So 1 million shares times 9, so that's right, 9,000 market cap. So the next day they will give cash ex date. So it should be the cash they will be offering to the investors will be pricely adjusted to its traded price, because cash will be issued to all the investors. So it's very hard to comprehend if, for example, that's how the market adjustments are done. There is also, because the shares are the same, but how do they get this cash to be issued to the is also the movement of the price. So I hope I have helped simply by this simple explanation. So anyhow, LTG for me is for those who have not yet heavily invested in this asset, will be not yet a buy recommendation for now. So it's the reaccumulation would be at the period where the payments of the dividends will be released. So somewhere in, if this is exit is September 1, so the dividend will be paid on the second week. So the second week after them, it should be a good accumulation period. So let's just say it's will be a reversal on this level. And to also consider, we have plotted the Fibonacci levels at 382 and 0.236. I have shared these price ranges to good for accumulation. So again, why? Because we are still anticipating for its Christmas dividend. So last year they have issued it at around December 1. So I anticipate they will also issue later this year. So to enjoy this bigger dividends, because last year they have issued 0.5, but normally they issued 0.3. So this is a good yield to consider if you have bought the price at this range at around 8 pesos per share, or at that range. So by purchasing it at 8 pesos per share, the appreciation of the price could pick up at that level, then may even fill these daily gaps. So that's good for the long-term investors, at the same time receiving the yield of its dividend. So on the fourth basis, and I will also try to tackle about the third one, is the essential of knowing the basic theory and the applicability of the time theory we have. So as I have discussed this principle, I also found out that this principle also is relative to the time that is being taken or being consumed by the prices. So as you can see, let's try to shift into a bigger time frame. So the period or the duration of the time that the price appreciated will more likely to be identical of the price take for its consolidation to happen. So from here, let's try to make a zone, and then from here, from this top, let's try to make it identical. So the I represent these boxes as the time and the impulse and the correction that I have taken and understood on the cycles of the market. So not at all times that this happens, but this can also serve as your guide on the proper timing of the on when to start reaccumulation, start reaping the profits of your investments. So enough of that. Basic Elliott wave is just counting 1, 2, 3, 4, and 5. So this is a clear impulse for me. It's clear upside. That's roughly 200% of the 80. And the decline is labeled in a 3-wave form. Maybe 1, 2, and then 3. So after which, use your Fibonacci levels as your basis of determining the support. Normally it's within the golden ratio of 0.382 or 0.618 is the golden ratio, but as we plotted it from the top to bottom. So these are all the levels that the prices are very reactive. So that's all the basic for the Elliott wave theory. I have 5 for impulsives, 3 waves for corrective. It's very safe for the investors to position on the corrective side, or once the price is almost to be completed on its correction. It's a little bit also conservative if we position at the breakout of the first impulse. If we notice the first impulse, the breakout of that first impulse, it's also very conservative to position on this area, meaning we have confirmed that the downside is finished or completed. And same is true with this LT is GMA network. So let's toggle back to daily. So it's very safe to position after this flag is taken out. If the price starts to break out and then retest, so it's nice to position from this side, breakout, retest, and then it should further continue its upside. So another approach is to approach it by placing your trade or your position at the same is through 5, use your Feb, and then toggle on your 0.382. So this is the ideal support to enter if you are using the anticipating a next impulsive move. For example, this is the first, you like to assume that this is the first impulse of the next phase. So this is the second wave you're anticipating for this third wave, and then so on and so forth. 1, 2, 3, 4, 5, because we're anticipating the completion of the downside. So 1, 2, once you level the 2, you have to spot the key Fibonacci levels at around 6382, just 8.51, and the price have clearly reacted and found a indecision and again rejection on these levels. So it's a very good objective approach on where to place your entry of the next investments. And then lastly, let's focus on TEL, and the last topic we have is the eighth wonder, the compounding. So you may be wondering, if you are a passive investors, when could you possibly double your capital without doing trading, physical trading, buy and sell, buy and sell, buy and sell. So this is the one that I have just linked or searched on only in Google. So we have get your number 72. Once you get constant 72 divided by the rate or the dividend yield, maybe
we base with the rate of return in a yearly basis. For LT, for these 5 stocks that I have shared to you, they have recorded at around over than 10% rate of return for the dividends itself. So what do you mean by that? So if you have been holding a stock, one of these stocks, so after every year you have accumulated 10% of the invested capital. So if you've invested 100,000, so 10% of it, you will be repaying 10,000 pesos every year without doing anything. Where is this 10% going? It will be going to your trading account on each payment dates of the capital of each assets. So if you have diversified your portfolio on these 5 assets I have mentioned, SEC, DMC, LDG, DME, DAL, you don't have to trade anything. Just hold these stocks, wait for their payment schedules. It will be reflected on your trading account, and it will be paid differently on each asset. Such as for SEC, they are issuing around 3 times or 2 times per year. For same is true with DMC. LTG is issuing 3 times as far as I recall, and then GMA is only 1 time per year. So this is one of the stock that requires patience for investors, and its current price now is very attractive to hold, to accumulate. And then lastly is for TEL is known for issuing for the month of March we have issued dividend, or April for currently, or the latest one was 14. Then finally they should issue the same at the rate they issued twice every year, and their price is very attractive right now also. This is in a weekly demand zone, and its potential upside is more than 10%. So if you're a long-term investor, you don't have to worry about this price appreciation, because you have a passive generation on these dividends alone. So how, where, or when could you double your capital if you are diversified on these different 5 assets I have mentioned? So if their average yield is around 10 to 15%, so let's say 12%. So going back to that formula, we have 72 divided by 12. Let's just make this once and for all, solve this one. 72 divided by 12 will be 6. 72 divided by 6. Sorry, 72 divided by the rate of return. We have 72 divided by 12%. So you just need to hold these investments for 6 years, and your invested capital will be doubled at around, for if you are invested, if you diversify your 500,000 for example on these 5 assets, because 100,000 per asset you have. So after 6 years, your trading portfolio balance will be 1 million. It's a guaranteed from these specific markets. Dividends are guaranteed, and this is a wonder that each investor should know, and early traders or early investors, young investors should know that there's a hidden gem in these stock markets. And so I have discussed everything well and good. I hope you will have learned something, and if you enjoy watching, I'm sorry, I'd like to teach and speak on English even if I am a Filipino. because I'm very comfortable to, and I also not fluent in speaking Tagalog because I am Bisaya. Thank you for watching. Please like, share, and subscribe to help me be inspired and motivated for the next contents we will tackle. And see you in the next video. Thank you. Bye bye. Happy weekend.